Okay. All right. Good morning, everyone. Or good afternoon, depending on where you are. Today, of course, is Thursday, March 16th, 2017. And I welcome everyone to the webinar today, and thanks again for being here. So just a couple of things. I mean, we've got, today's going to be fairly quick. There's not a lot to talk about today. I'll go over the markets as I usually do, but you know, we're kind of in a lull. I mean, yesterday obviously we had the Fed announcement. Earnings season is somewhat winding down, so there's not a lot of companies reporting. So what I want to do is start out again, as I have been doing as of late, with the longer term view, the monthly charts, and then we can hone down into the short term charts. And then we can look at a couple of the earnings. A couple of them did announce today. It was a nice move on Oracle. And then look at some charts that, you know, everybody really wants to take a look at. And, you know, and hopefully we can, you know, kind of, hopefully there'll be some input here, and you know, and we can kind of chat about any other particular issues or stocks, securities that everybody wants to discuss. But anyway, of course, today is the start of the NCAA tournament here in America, so we've got a nice 2-week run with basketball, college basketball just beginning. So it gets really exciting this first weekend, which I really look forward to. Let me get the slideshow going. Okay. All right. Okay, guys. All right. Here we go. Today's the 16th, obviously, and our regularly scheduled webinar. So we're going to start again with the monthly charts. And again, I'm showing these because I want everybody to be fully cognizant of the extreme levels we're at and what these extreme levels are, because, you know, to me, I think at this point, one of two things is going to happen. And again, I keep pointing this out, but in terms of time, we are certainly overdue for a strong correction, all right? Doesn't mean we're going to correct, all right, but it means that we need to be cognizant of that. The other thing we need to be cognizant of are these upper bands. And as you can see here on the S&P 500, that level, wow, I have this wrong, 2376. The upper band is 2320, okay? The smaller Bollinger Bands are 2376, so that's my fault there. We are trading about 65 points above the upper band. Now, typically, I would not consider a short above these upper bands just yet, okay? I would ultimately like to see a close back inside the upper band before I would initiate a short, all right? Now, on the weekly chart, we're still below the upper band on the weekly. On the daily, we are above it. So my feeling is we're probably going to continue to run up, and at that point, we get some weakness and we'll probably have a pretty steep pullback. At least that's the scenario I'd be looking at. Here's the Dow. And again, I don't show the diamonds because we don't have the data for that. But on the diamonds, the upper band is 20,127. We are now about 830 points above the upper band. All right. And again, at this point, discard the price formations, okay, because the month isn't complete. Because, you know, obviously these bars are showing small doji bars. However, you know, we still have about half the month to trade. The comp, wow, boy, I did this wrong as well. The upper band, extreme band, is 56.56. And I apologize. I pulled off the shorter term Bollinger Band, which is 58.47. The market, as of yesterday, was trading at 49, closed out at 5,900 roughly. So about 250 above the upper band there. Here's the market that we've been kind of really looking at closely, because The crude oil came back, as you can see, it had about 3 months where it stalled against the mid-band. 54.79 is that price level. And as I said, if we couldn't break through that level, we're going down. And at this point, we started to head back down. Now, of course, yesterday we had a bit of a rally in crude, but we'll go over the levels in a bit. And then here's gold. Okay, gold, again, traded well above the upper band. All right, we've had a 2-month rally, and now this month we're actually selling off. Even though gold had a spectacular move yesterday, it's still, based on this monthly price bar, still towards the low of the bar. And then here's Apple. Okay, Apple 130.14 is the price level. It closed yesterday at 140.46, so Apple's about $10 above that upper band again. And again, as we can see from Apple here, it did trade above the upper band for extensive periods of time. So again, it's back to showing just incredible strength. Now let's look at the short-term view here. Okay, here's the S&P 500. Now, this is the identical chart really from last week. There's nothing, the last webinar, because nothing really has changed, okay? The price kind of hovered between the 23.75 level and the 23.59 level. Now, a couple of points I want to make here, all right? Going into yesterday's Fed announcement, and again, you can see yesterday, you know, this, of course, is data pulled off at the close from yesterday. Let me get a... You can see yesterday, we were up almost $20, all right, on the S&P. We had the strong move after the Fed announcement. Now, a couple of comments about the Fed announcements. You know, I kind of look at the Fed announcements as being something very similar to earnings, all right? Even though these are market-wide events, as you know, they have the ability to produce a fairly radical and extensive move. Now, just like I really don't advocate trading before earnings, I typically don't advocate trading before a major market-wide event. Now, having said that, for us, knowing these different price levels, all right, both in the S&P and the VIX, you know, we can basically make a fairly intelligent decision and have a directional bias, all right? And I think more importantly, it would tell us really not what to do, if that makes any sense. Maybe that's not the proper way to say it, but for example, we know that the downside confirming line is 23.5938. Now, the S&P essentially tested that twice. And again, if we look at this chart, really going back to the end of February, we can see what happened. The S&P broke through 23.75, which was the major objective. And we had that as an objective for a long time. And, you know, if you remember, it never quite got to that level, pulled back. And then finally, it came up on that news announcement. I think that was the non-farm payroll, and just screamed, all right? Took out 23.75, actually gapped above it, and proceeded to go really to the next upside confirming line, which was 23.90. And quite frankly, that kind of faked me out because it actually went further. It went about $10 further than I would have expected it to go. I would have expected there's a stall somewhere around 23.90, maybe slightly below it. And then what's happened is the market pulled back, took out 23.75, and tested the downside confirming line twice, all right? Came down to 23.54 and recovered, closed above it. Came down to 23.58 and closed above it just the other day. And then, of course, yesterday, based on the Fed announcement, the market screamed up and almost hit the 2390.52 level. This to me would be more indicative of what I would have expected back at March 1st, because it stalled about, what, about 50 cents below that line. But the point I'm trying to make here is this. There's 2 points, and we'll go over the VIX as well, but the main point here is this, that because the S&P could not close for 2 days under 2359 level, it still would have kept you biased to the long side. All right. At the very least, you wouldn't have contemplated perhaps a short side position. Now, again, I think that's the critical thing about these price levels too. I mean, you know, perhaps they can prevent you from making a mistake as opposed to actually committing you seriously to the long side. And again, as I said before, trading these market-wide events, to me, are fairly similar to trading earnings. Now, you have to admit that most likely option prices were inflated going into the Fed announcement. All right, so, you know, it's theoretically possible that the gain, had you been long calls, might have been fairly narrow or fairly small, only because the market makers most likely inflated the options. And again, if we think about this for a minute, the reason the options are inflated are because of the unknown. So therefore, anticipated volatility is going to pick up going into an announcement of that type of magnitude. Now, I'm not saying you can't make money. Most likely, if you straddled it, you may not have made any money, you know, or you might have made a small amount of money. But clearly, having the directional bias would have been the most opportune situation had you traded this. Okay, but going back to the point here is that by seeing how price reacts around these levels and knowing in advance what those key levels are and knowing how the market reacted around them, you know, you still would have been biased to the long side. And the other key thing is that the VIX kind of has been doing what we've been expecting, all right? Let me pull this off and go to the VIX. You know, one of the themes I guess I've been kind of harping on here is that I don't really see a correction coming in the market until we see the VIX get above 1250. All right, and what's kind of interesting about this chart is you can see there's been basically 4 occasions where 1250 has been tested. Okay, and all 4 times it failed and headed down. And where did it go to? Basically to the major 1094 line. Actually hit that yesterday, took it out, went to 1060, and then closed up at 1163, which to me is fairly significant because 1133 is the upside confirming line. So that tells us that if the VIX closes above 1133 today, we should test 1250 on the VIX, all right? So that's something to be aware of because it would tell me that most likely the market would continue to pull back tomorrow, assuming it does close above 1133. Now here's the Qs. The Qs has been really the stronger of all these markets. And I guess it's back to somewhat of a leadership role. And again, similar to the S&P, what's been kind of interesting about the VIX is it's been kind of bouncing between the 131.25 major line and the downside confirming level, which is 129.69, and just kind of been ping-ponging back and forth. And again, you know, I remember a long time ago talking about this particular pattern with these major levels, and I don't know, somebody came up with the idea of calling it the snake pattern because seems like when a major level is broken, all right, oftentimes we'll see this happen. It just kind of trades between, you know, the major level and the next downside confirming line. It just kind of snakes around that line. And that's basically what's happened here with the Qs. And then, of course, the Qs broke out yesterday based upon the announcement, fell short of the 132.81 confirming line. Okay, you can see it came about 40 cents short. So to me, that should be resistance. You know, typically the first time it gets up there, it's kind of repelled. And we'll look at the live market after I close this down. But here are the diamonds, okay? Again, diamonds took out the 210.94, fell short of the major 212.50 line, and it's just been kind of struggling to reclaim 210.94. And then here's the TLT, okay? TLT had the strong up move yesterday, but you can see here, what's kind of interesting about this chart is that, let me get a pointer here to point this out. The TLT had moved into a downtrend already on the 60, right? And then it kind of bounced and kind of limped along the lower band, all right, and finally found support there on the 13th. Had a little gap up and proceeded to move up. So the TLT was already in the progress of having what I would call kind of a dead cat bounce. Now 115.63 is the downside level, and you can see it held above there. The lowest it got was 116.49, and it's proceeded to bounce up and basically stall right at the 118.75 line yesterday. All right, now we know 117.95 is the confirming line down, so we'll see if that holds as support today. And then the GDX. The GDX had the strongest move of really any of these markets yesterday, but I think what's kind of interesting about this is the GDX is in a downtrend. It's in a downtrend on the daily, it's in a downtrend on the 60. It found support roughly at the 21.88 line, and now it's coming back up to test 23.44. The mid-band is 23.57, so that should be strong resistance. And, you know, I can't help but think that this is kind of a fake-out move, you know. And then here's XLE. And again, the XLE is similar to the TLT in the fact that it found support at the lower band here on Tuesday, all right? And as we can see here, it broke through the lower band back here on the 9th. 69.53 is the confirming line up, and it actually closed above it for 2 days, came back, tested 68.75, and yesterday it stalled within a point of the you know, the next major level, which is 71.88, which I do believe should be resistance at this point. And then here's Apple on the short-term view. Okay, Apple again showing tremendous strength. 137.5 is the major level. You know, it just spiked below it that one day and recuperated, got above the 139.06. The objective should be up to 143.75. Okay, that's what I wanted to cover today on the chart. So shoot me through any questions if you have any questions on the index. If not, then what I'm going to do is close down and we'll take a look at some of these instruments live. By the way, does everybody like the new interface here on GoToWebinar? Seems like it's a little bit cleaner. I don't know. Okay. All right, let's take a look here. And we'll start with a couple of the earnings trades. Here's Oracle today. Oracle had a really nice pop, 7%, up 7% today. Now, interestingly enough here, up over $3. Look at where it is now, way above the upper band, okay? And way above the upper band. And let's go to a 60. Excuse me. Way above the upper band. Now, we've had a bar here close below the low of the first bar. I'm thinking this stock should pull back. Excuse me. And then let's look on the 30. Way above the upper band as well. So now this is the kind of stock, by the way, on an earnings announcement like this that you have the luxury of just sitting and waiting on to see if it comes back up, rallies, and fails. And if it does, this could be an interesting short side opportunity. But what's interesting about Oracle is, we go back to this daily chart, all right? Positive that money flow is. Money flow has been severely positive, really since, the end of January. And honestly, even though it's overbought, I mean, to me, way above, we're actually literally sitting at the upper band yesterday, kind of trading around the upper band. But to me, that money flow is really a fairly decent indicator of directional bias pre-earnings. And in this case, again, it worked again. Now, let's take a look at JBL. JBL reported. Okay, and again, money flow extremely positive. Again, it's up about 3%. Not a huge move, but nonetheless, fairly strong move. We've had DG report. See what he did. Okay. Today it just finally moved, money flow moved in, up about 2.5%, just under 2.5% on a stock in a downtrend. Let's see if Dollar Tree moved. All right, wow, they moved. All right, Dollar General moved 2.47%. Dollar Tree is up almost, it's up 1.69% in concert with their earnings. And again, this is kind of interesting because oftentimes you'll see a company in the same industry group move in favor of, or the same sector move in the same direction as the company that reported. In the case of Dollar Tree, that's exactly what's happened here. Let me see. Wow, Dollar Tree was sitting on the lower band here on the 10. So again, that's kind of an interesting move right there. And we had Perrigo report. All right, didn't really do much here. Now, we have Adobe reporting this afternoon. Adobe sitting right at the upper band. All right, literally sitting at the upper band. Today's high was 23.60. The upper band was 123.50, and it's selling off slightly. Now, what's kind of interesting about this is the money flow, even though it's positive, is going down. If we look at Oracle, see how that was maintaining? Actually, we had a slight upward movement in the money flow. Now, The question here is this. Would we have a directional bias on Adobe here going into earnings? Or should we have a directional bias? You know, we've got positive money flow. Obviously, it's in a strong uptrend, sitting right at the upper band. As we can see from Oracle, the upper band certainly didn't stop Oracle, blew right through it. So, I mean, to me, this is the kind of stock where I'd look at it and go, well, you know what, I might want to pass on it. But doesn't mean there can't be a nice move tomorrow. Yeah, good point. Big lots probably moved too. Wow, yeah. See, big lots I like better. This is a better stock to me than Dollar Tree because it's in an uptrend, even though money flow is negative. But look at how negative the money flow has been, and it's in a downtrend. So big lots to me would be a better long-term, longer-term trade. Yes, great point. Andrew says Adobe looks like it could be a buy if it pulled back. I would hope that Adobe would sell off. Because again, we've got positive money flow here. Let's take a look at the 10. Positive money flow, we've got a 10 in an uptrend. If this thing sold off, lower band is 119 on the 10. Ideally, I would love to see this drop to below 119. And I think that would be a nice buy point. 117 is the lower band on the 30. So what would be kind of interesting is to see a move down to 117, 119 area. And then let's take a look at the TLT. And by the way, Andrew, I'm just going to mention this on the webinar, Andrew, if you don't mind. Andrew bought puts yesterday on the TLT, and he had a double overnight using the weeklies, which was a great trade. I mean, you know, look, came right back up, and it stalled right at the resistance line. That's not what I want. Here it is. Let's see if I can find it here. Yeah, sorry. It's got to be here somewhere. We just went over it. There it is, TLT. Okay. 118.75 is the major resistance line. And what's kind of interesting about this chart is you can see yesterday, let me put up the 60, had the strong move up, and then the last bar of the day was that little kind of doji bar. And it stalled right at the 200 EMA, which basically is equal to the resistance line. Stalled and dropped down. Now, the point here is this, that, let me put up a 10. On the 10, it came to the upper band, all right? We had all these areas of confluence here yesterday. And to me, this was just a really smart idea to grab a put position on the TLT. And, you know, you can see the effect of using the weeklies. And again, this was on a Wednesday. It's not even a Thursday going into a Friday. So he ended up with a double overnight, basically, on the gap down this morning. Now, to me, it was smart to pull it off, take your double, and then look to perhaps reinitiate the position. And my thought was on the gap fill, it would probably be a really smart trade. Now, what's happened here is the 10-minute has moved into an uptrend. Okay, so you'd want to see this thing collapse underneath the mid-band. And to me, the objective, by the way, on the short would be back to the mid-band, which is about 117.30. Still about 60 cents above it. So take a look later to see if it hits that price level. Now, the other thing we know is if it breaks that mid-band, most likely it's going to continue down. Excuse me. Well, I tell you, we've been fighting snow over here. It's been crazy. We got bombed. We've had school closures. It's been really a bizarre situation for March. Okay, now let's go back to the 30-minute charts. Take a look at the S&P. Here's the S&P. We got up to the 2390 level, and we had the pullback, slight pullback down. Let's see if the VIX gives us any idea here of what we're going to do. VIX is holding right now at 1135. I believe the confirming line is 1133. So here's my thought process going into tomorrow. Watch where the VIX closes today. If it does close above 1133, we will probably get a little bit more downside reaction tomorrow. If not, then we're heading up. But you can see here, and I'm going to point this out, on the 30, it crossed into a downtrend. Now we look at this, the averages are kind of moving together, moving up. They're almost getting to the point where they're going to cross back up. Not quite, but it's getting there. But we should know by the end of the day based upon where the VIX closes. Let me show the VIX here. All right, there's the VIX. 1133 is the price line. And, you know, it was kind of interesting because what I was looking at yesterday was this. Get a different pen color. There's the downside level, which is 1211. Yesterday opened a penny above it, right? And naturally what happened was it proceeded to, you know, basically fail at the 1211 level, right, and proceeded to run down. Pretty much ran down all day. And, you know, I guess, well, we can't really see it here. Let me put it up on a 10-minute chart. Because the Fed announcement was at 2 o'clock. So here's 2. It had broken down below 1211, right? And what's interesting is, you know, as the announcement came out, the VIX just spiked down. Had the huge spike, then recovered, and then just kind of proceeded to drift down the rest of the day. All right. And, you know, actually closed above 1133. All right. So right now, today, the key is going to be that price level, that 1133. So the beauty, again, the beauty of having these levels is that, you know, we really don't have to guess, okay? We can react. We can say, okay, let's see what the VIX does today to help us predetermine what should happen tomorrow. And, you know, it's kind of a weird concept because most people look at the markets and they, you know, they're trying to estimate or guess where the market should go. But by reacting, it should tell us what the market should do. Because let's face it, you know, we are at such lofty levels in the market that, quite frankly, it's kind of scary to initiate long positions. I hate to say it, but, you know, you don't want to be the guy or what they call the last man standing, okay? You don't want to be the guy buying the top, all right? You know, we certainly want to avoid that syndrome. We'd rather be buying at the lows and selling at the top, but, you know, unfortunately what's happening here is, you know, we've got a market that just doesn't seem to want to quit, And you know, you do want to be precautionary because you don't want to be that last man standing. Now, does it mean that there's not opportunities out there? Absolutely. Okay, you know, every stock is going through their life cycle. You know, for example, I was looking this morning at FCS. You know, here's a stock that looks like it's bottomed, okay, and it's already moving up about 13 cents. Low price stock. This is a BDC. I don't know what they pay right now, but I can guarantee you after the webinar I'll take a look. Let's see. Yeah. So my point here is that, yes, there are still stocks that are setting up. Another stock that I'm looking at is this. It's CVG. You know, look at this stock. This thing stopped at the lower band, recuperated, and now is kind of trying to hold. So be sure that I'll be looking at an alert on this stock. If it appears to be holding here. And here's the weekly chart. So this is really a very attractive situation right now. Okay, we've got a stock that's basically sitting at the lower band on the daily, basically sitting at the mid band on the weekly chart. The mid band is 2087. Right now it's trading at 2142. Now, you know, this stock may not break out this week, all right? But this is one on my watch list. And this is one that I'd certainly be interested in nibbling on if it does turn around, you know, if it does look like it's holding support. And ideally, the ideal situation is that, you know, the weekly price for it kind of closes like the way it is now. And then we look for a buy above the high of that bar at 2158. And, you know, from there we have a potential move up to roughly the 26.5 level. So that's a very attractive situation right now to me. So the point here is, yes, there are certain stocks that are going through their various, their own kind of life cycle. But again, you know, the point here is that as the market continues to scream higher, you know, these really overbought situations become less and less. That's really the problem here right now. You know, when we caught a few dollars on QCOM. Let's take a look at QCOM. Okay, kind of holding around 58, you know. Got a little overbought. I like the fact that money flow has turned positive. All right, but you know, this is a stock that had bottomed. You know, to me, the objective on QCOM is back to this gap fill. But even now, I'm not so certain I'd recommend it unless it pulled back and got oversold again on the daily. All right. Any questions? Anybody want to take a look at something, and we'll see if we can. I'll be more than happy to take a look at any particular issues that you guys want to look at. Interesting. I was looking at Shake Shack, and this is kind of interesting. Shack. I'm not sure why I actually did look at this, but kind of interesting. Okay, here's the weekly chart. We don't have enough data. This was a new issue, if you recall. But Shack has gotten really quiet here on the weekly chart, sitting around the lower band. The daily's in an uptrend. Now, what I want to see is, this line continue up and peak and head down. And to me, that might be an interesting long candidate. And it might have some possibilities to nibble on. I guess that's a bad word when I talk about Shake Shack. I wouldn't mind nibbling on one of their hamburgers. I do hear they're pretty good. But what's appealing to me about this stock right now is how low this ADX line has gotten. I mean, it's gotten very, very quiet, which is usually indicative of a move to follow or a potential move. Wow. Looking at more data here, you can see that it ran up to 96, 97 almost, after it came public. And it's been pulling back ever since. Good question. See when they report. Has anybody been to a Shake Shack? They just reported March 2nd. And look, investors shaken. So they reported on the 2nd, which is back here. And it was down. It closed at 32.97. That was down about 10% off their earnings. And now it's trying to hold support at the lower band. What really makes this interesting here to me about these lower bands is this. If this thing can consolidate around the lower band and you enter long, you have a very low risk trade, because you know if it breaks through the lower band, you really don't want to be long. And most of the time it does hold the support, so we'll see. So they don't report for a few months now, but they did just report. Yeah, down 3%. Revenue increased. Yeah, so they had an earnings miss, looks like. I wonder what the PE is on this stock. What the hell happened? Huh. Let's see what the PE is. PE is 58. So again, these guys are being priced as a real growth company. It's similar to like a CMG, where they're anticipating and opening all these restaurants. Now, CMG is interesting. It just crossed into an uptrend here. This actually is interesting now. I don't like that. The weekly's crossed down. This probably could bounce and head down. Okay. All right. Anybody want to take a look at something? If not, I'm going to probably close down. I do have a little more research I have to get done today. But All right, good. I don't see anything. Let me take a look here. All right, guys. Well, listen, I'm going to close down for today if everybody doesn't mind. And I want to wish everybody a great rest of the week, and we'll see you again in 2 weeks. Thank you very much.